Hello, this is Prajul on this side, and we're going to talk about the case of Sun Pharma. So, the sustainability and ethical performance of Sun Pharma will be discussed in the current presentation, and we shall start by providing a brief company overview and revenue share, its supply chain, governance practices, and financial reporting practices. We will then talk about the carbon literacy and energy management, and also look at the benchmarking performance of the Sun Pharma in comparison with other competitors. At the end, we will conclude with the important lessons, weaknesses, and suggestions on how to enhance long term ethical sustainable development. The Sun Pharma is the largest generic drug manufacturer in India. In FY25, it made approximately 187 billion rupees or 22 billion US dollar. The revenue is mainly generated in India and the US, with emerging and other global market contributing small percentage. The company promotes objective of the UN such as good health, responsible production, and climate action. Its ethical decision inform its research, equitable pricing, and patient programs, and sustainable finance invest in green plants and community are striking a balance between people, the planet, and profit. The company focuses on SDGs such as good health, SDG 3, responsible consumption, SDG 12, and climate action, SDG 13. Sustainable finance reports, green manufacturing, and social health projects. Then Sun Pharma links ethics with profitability, showing the triple bottom line approach of the people, planet, and profit. So the pharmaceutical industry is experiencing a mounting worldwide demand such as climate change, fair access to drugs, and increasing stricter ESG regulation. These are the risks and opportunities that Sun Pharma has to innovate responsibly. With the institutional theory, we understand the legitimacy demanded in the global norms by way of sustainability commitments, where systems thinking from science points out the interdependence of economic and ecological results. The approach used by the Sun Pharma would thus have to balance the competing expectations, that is, profitability, adaptability, affordability, and environmental stewardship. The knowledge of these dynamics creates a platform based on which corporate sustainability can be analyzed, such as shifting towards being more of a compliance oriented strategy towards being a value creating adaptive capacity that can be vital in competitive advantage in international health markets. So moral decision making has been the key elements of the reputation and long-term credibility of Sun Pharma. Carroll's CSR pyramid and subsequent Schwartz-Carroll three-domain model demonstrate how organizations can transcend the legal and economic obligation that define their role to the ethical and philanthropic role. Using the Ackerman and Eden stakeholders salience grid, it is possible to identify the effects of patients, regulators, and investors on ethical priorities. Sun Pharma exhibits dedication via affordable medicine programs, WHO, GMP, and observation to the national environmental requirements. But the post merger related governance issues raise issues of continuing cultural programs. And moving on to the next slide, the report of Sun Pharma 2024-25 demonstrate concrete environment related activities, and that is 38% of renewable energy, zero liquid discharge, water recycling, and significant waste elimination co-processing. And this can be said to be in line with circular economy as presented by Blockhen et al., where the focus is on narrowing, slowing, and closing material loops and with the sustainable value framework introduced by Hart and Milstein, whether pollution prevention is connected to the stakeholder engagement. More importantly, operational efficiency has been improved, whereas strategic coherence and scope 3 emission disclosure is poor. Uh, and then Sun Pharma is ethical in its supply chain practices by screening all major suppliers based on OECD due diligence guidelines. It is also trying out new API tracking systems and recycling containers as a way of reducing waste. The model of EHS governance existing in the company links all levels to it at the site managers and international heads supported by the EHS policy and international standards and by the powerful values of the economy. Uh, and then the finance investment and reporting. In financial year 24, Sun Pharma experienced a good financial growth as the total income amounted to rupees 498,510 million and the profit was 95,764 million. And the company invested in people with operating cost of 26 260 47 million and employee benefits amounted to 94,021 million. So capital providers received payment of 31,392 million and low debt equity ratio of 0.35 indicates financial stability. The company adheres to sustainable finance theory and integrated reporting framework with the connection between profit and social and environmental value. It uses metrics of ESG in investor reporting and invest 3 billion in solar investment. It does not have third party assurance and science based ESG performance targets. However, unlike Novartis and GSK, net debt to equity is 0.35 times, showing strong financial stability. ESG indicators included in investors report BRSR and GRI 2021 standards followed. Around rupees 3 billion allocated for solar energy expansion in financial year 25. Moving on to the next slide. Ethical finance shows how the convergence between stewardship and stakeholder theories lies in responsible corporate practice. In case of Sun Pharma, one can see that financial strategy that is implemented with ethical consideration improves investor trust and social acceptance. The moral responsibility of the firm in relation to the community in terms of eye care, mental health, outreach, sanitation, and so on depict accounts on the community. Adhering to stewardship theory, leadership as custodians of the common good is not profits only agent. Nonetheless, poor comparability of results in different regions weakens the comparability of the results globally. Coordinating universal ESG standards and integrating key performance indicators that are based on ethics into the executive compensation would also strengthen the relationship between moral purpose and sustainable economic performance further. And then the carbon literacy and energy management at Sun Pharma are based on three main steps, which are monitor, minimize, and decarbonize. The company monitors the energy consumption, enhances the efficiency, and transitions to renewable energy to reduce the emissions. In 2024, carbon literacy training was provided to over 500 employees and contributed to creating awareness at a team level. Enterprise risk management process has incorporated climate risk. Carbon risks real options theory supports early intervention in a manner that will save future expenditures. Nevertheless, Sun Pharma does not yet have an obvious science based net zero pathway, which constrains the climate credibility in long term. So, the benchmarking outcomes of the Sun Pharma demonstrate good performance on whole and leadership in the most important customer oriented domains. The company is a leader in the price and customer service, which demonstrates its adherence to the affordability and low quality and quality provision. It has a middle customer loyalty, however, as it is ranked third in quality of the product with 3.6 out of 5 and third in net promoter score with 6. So, Sun Pharma, yet more effort should be made in product innovation and customer experiences. So, the recommendation Sun Pharma needs to focus on five evidence based action in order to reinforce sustainability leadership to begin with. Implement independent ESG assurance in accordance to AA 1000. Second, make a promise to science-based emissions targets in line with the UN SDG 13. The third, increase packaging and waste valorization efforts in the circular economy. Fourth, incorporate executive remuneration with key performance indicators of key leadership. And the fifth, report ESG in a consent manner in all international business units so that it is comparable. This action would make Sun Pharma stop being reactive to compliance and proactive to innovate, increase stakeholder confidence, access to green financing, and competitive advantage in long run, and would be an example of how pharmaceutical companies in the emerging markets can emulate responsible, inclusive, and climate aligned behaviors. So, summarizing the above discussion, Sun Pharma is making considerable strides towards introducing the use of ethical and sustainable activities in its international business. It has improved on resource efficiency, governance structure, and corporate responsibility, but the greater incorporation of science based targets, transparency, assurance, and uniform global reporting becomes essential. The discussion shows that the sustained finance and ethical decision making are self sustaining components. Collectively, they support the growth of resilience, investor trust, and social good. Through shifting to strategic sustainability, leadership in a place of compliance oriented CSR, Sun Pharma will be able to establish itself as a revolution in the context of sustainable capitalism and fair healthcare in the dynamic pharmaceutical environment. So these are the recommendation and thank you.